Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast. Good morning. It's Tuesday, the 4th of November. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Goldman Sachs CEO again says he believes a significant stock sell-off is coming, but it's nothing to be afraid of.
The UK's Prime Minister Keir Starmer says the upcoming budget will see tough but fair decisions.
Plus, the EU's climate fight heats up. Ministers meet to hash out a deal on the next stage of targets to cut emissions.
Let's start with a roundup of our top stories.
David Solomon, the CEO of Goldman Sachs, says he believes stocks could fall by as much as 20%, but he doesn't think that means people should be reallocating their investments. The view from one of Wall Street's biggest names echoes his previous comments on the market and comes as global stocks have dropped, partly due to uncertainty about Fed rate cuts and concerns about lofty tech valuations. Speaking at the 2025 Global Financial Leaders Investment Summit, Solomon said a market pullback should be expected.
It is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
Solomon added that Goldman's advice is to remain invested. The comments are echoed by Morgan Stanley CEO Ted Pick. He said we should welcome the possibility that there could be 10 to 15% drawdowns. Meanwhile, Capital Group CEO Mike Gitlin told the summit that while corporate earnings are strong, what's challenging are valuations.
Well, the warnings from CEOs come as shares in Palantir fell in extended trading after earlier gaining as much as 7% following the company's latest set of results. Palantir raised its annual revenue outlook to $4.4 billion and it beat analyst estimates for third quarter sales. But concerns about the company's record valuation led to a pullback from some traders. Palantir's been one of the biggest beneficiaries of the AI boom. Its shares are up more than 150% this year, but the company now has the highest price to sales ratio in the S&P 500. Jill Luria is head of technology research at D.A. Davidson.
This is a company with a $4 billion run rate that's growing 63%. There's nothing even remotely close to that, which is how we got to the situation where valuations are at unprecedented levels, not just for them, but for any software company. And that seems to persist as long as they can continue to raise the bar. Let's not forget, that 63% is an acceleration from the 50% last quarter, which was faster than the quarter before that.
Gil Luria speaking there as tech stocks more broadly rallied on the news that Amazon had signed a 7-year deal with OpenAI for computing power. OpenAI will pay Amazon Web Services $38 billion for access to hundreds of thousands of NVIDIA chips.
In the UK, the Prime Minister Keir Starmer says his government will make tough but fair decisions in its upcoming budget. The warning comes as the Chancellor considers dozens of possible tax increases to fill a fiscal hole of as much as £35 billion. Bloomberg's UK politics reporter Jo Mays says her options are limited.
She has this manifesto pledge not to increase taxes on working people. So that's why we are talking about things like an exit charge when you leave the country, paying perhaps 20% tax on your holdings. We are talking about things like larger properties, paying more in council tax, perhaps. But her problem is that there's a large sum of money to be raised, and it's not clear how much these kind of narrow taxes on the wealthy would raise.
Our UK government reporter Jo Mays speaking there. Bloomberg understands that Reeves wants to use a potential productivity downgrade from the Office for Budget Responsibility to simplify the UK's tax system and make it fairer. New pre-budget analysis from the Resolution Foundation think tank suggests unexpectedly strong pay growth may offset the anticipated downgrade, leaving the Chancellor with a fiscal hole that may be smaller than many private forecasters expect.
In the US, voters are heading to the polls in the biggest set of elections ahead of next year's midterms. Governor races are being held in Virginia and New Jersey, and a new mayor will be elected in New York City. Polling shows Democratic nominee Zoran Mamdani has a lead in that race. Frank Luntz, a politics and communications consultant, says he expects a tough set of results for the Republicans.
The way that the voters usually react in an off-year election, which this is that they punish the party in power. It just happens every 2 years, and I think it's going to happen this time too.
Frank Lunt speaking there on Bloomberg's Balance of Power. President Trump has endorsed the former New York Governor Andrew Cuomo, saying that he would be reluctant to send federal funding to his hometown if Mamdani is elected. Michael Bloomberg has endorsed Andrew Cuomo in the mayoral race and donated to a super PAC supporting Cuomo. Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg Television and Radio.
Saudi Aramco has reported profits that beat analysts' estimates as a boost in production outweighed the impact of weaker oil prices. Net income, adjusted for one-time items, rose by 0.8%, the equivalent of around $28 billion in the third quarter. That's compared to a year earlier. The results surpassed market expectations as free cash flow also exceeded the dividend payout.
And lastly, top CEOs at Western companies are cautiously optimistic that China's long retail downturn is coming to an end. Several firms have posted strong results in China in recent weeks, suggesting a rebound in consumer spending. Bloomberg's Freddie Fulston has more.
L'Oreal, Adidas, LVMH, just a few companies signalling an uptick in consumer confidence in China. It comes as Beijing has pledged to significantly boost consumption in its economy over the next 5 years. But it's no mean feat amid an uncertain job market and a lingering real estate crisis. Estée Lauder's CEO, Stéphane de la Faverie, told Bloomberg there's some momentum building and the market is starting to accelerate, but stopped short of declaring a full comeback, saying there's still some caution in China. In London, Freddie Fulston, Bloomberg Radio.
And those are our top stories on the markets this morning. The MSCI Irish Pacific Index down by 0.9%. The Nikkei in Tokyo 1.3% lower. The Kospi in Seoul down by 2.3%. European stock futures firmly in the red as well, down 0.7 for Euro Stoxx 50. Wall Street, we're seeing futures lower as well, 0.9 for S&P E-minis, 1.2% for Nasdaq futures. The 10-year Treasury yield down 2 basis points at 4.09%.
Well, in a moment, we'll be discussing more on whether equity markets are due for a downturn. Plus, is the EU retreating from its leadership role in limiting climate change? That coming up next. But this story caught our attention. This is the story of men's groups in big companies. This is really an interesting story, isn't it?
Yeah, I mean, our colleagues Jeff Green and Sajal Kashan have been writing about this as well, despite the fact that I know certainly I rolled my eyes a bit when I read the headline of this as well, because you kind of think, like, do men need more representation? Are they not represented enough at leadership roles in companies, or with, for example, higher salaries? This is the case of many companies in corporate roles as well. But it is something that is happening in companies like in the UK. Channel 4 and BAE Systems are two of them who've spoken to our colleagues for this piece as well. Yeah. And I suppose if you think about it, you know, there are groups for other... there are community groups for other communities at work. You know, you could have LGBTQ groups, for example, at work. Absolutely. So why not have a men's group as well is one argument for it. It's an interesting piece because I think it examines both sides of this argument. You can argue it both ways.
Yes, you can.
I think to people.
It's just interesting that the companies that they cite, Estée Lauder and BAE Systems, you can understand why in some ways those are the companies that stand out. Estée Lauder's got largely a female workforce. BAE Systems, the huge defence contractor. They are largely groups that are focused on men's health, their physical well-being and perhaps even their financial health. But yeah, I think it's a very good topic to think about, though.
Yeah, I mean, the argument that these groups provide support to people to talk about health issues or other issues at work is sort of the goal, and they're also very conscious about not being perceived as a boys' club. They're open to women to join as well, and some of them have even been co-founded by women as well. Look, it's a corporate trend that's out there. Our colleagues have reported on it. It's worth a read. We'll put a link to the story in our podcast show notes.
Okay, well, let's think about the markets now. The comments from the Goldman Sachs CEO and others warning about this possibility of a 10 to 20% drawdown in equity markets in the next year or two. Let's bring in Bloomberg TV anchor Kriti Gupta now for more on this. We've had equity markets, particularly in the US, hitting record high after record high in recent months. Is this warning from Solomon, from others, that things could come down any surprise? It's also quite a broad brush warning about a drawdown.
Yeah, I think it's Newton's law, maybe the second or the third, that what goes up has to come down. I wasn't very good at science, hence the career in journalism. But I think that's exactly what's happening here in this market. You are seeing an exponential rise. This isn't your constant kind of grind higher that you've seen in past decades. This is ultimately almost kind of a stock chart that's going basically vertical. And that is where a lot of people are starting to get nervous. But before I came on here, I did look up the year-to-date performance of the S&P 500. We're at 16.5% year-to-date. So a 10% drawdown would give us, again, rough math. This isn't exactly how the math works, but still an almost 7% gain when you look at the S&P 500, which actually has beaten previous years of index performance. So that's, I think, kind of the tone that a lot of these executives are taking, which is that, yes, there's a lot of momentum. Yes, there's a lot of excitement. Not all of it is backed up by the fundamentals because so much of it is based on growth you're going to see in 5, 10, maybe 15 years. And then, of course, you never know what happens in that longer time frame. And for that reason, because so much of it is pegged to speculation, is pegged to expected growth, you could see some sort of crash down to reality. But again, they've all kind of cushioned all of their statements by saying that even that crash down wouldn't be the worst thing.
Palantir is an interesting example in the question of tech valuations as well, and whether or not they are stretched, because the results are, on the face of it, extremely strong. But as you say, investors still wondering about the outlook down the line.
It's a really fascinating one because Palantir is ultimately a data service company. It does data software. And one of the real key reasons that it became such an AI kind of popular stock is because a lot of the defense contracts from the U.S. government started utilizing Palantir's data services. So not only did it become a technology company, ultimately an AI company, because they were investing heavily in those as well, it had kind of the stamp of approval from the U.S. government, which if you look at other contractors that the U.S. government uses, like Lockheed Martin, for example, or Boeing, when they had more exposure to those federal contracts, you do start to see this kind of inbuilt premium of it being viewed as kind of a safe stock because so much of the revenue comes from those federal contracts. I think what's really interesting here, and you can see this in these numbers, their bookings are actually up. Their sales numbers are up. Their profit is up. On the surface, everything looks great. But this is where the classic kind of adage of Wall Street comes in, where you buy the rumor, sell the news. And that's kind of what's happening here. To your point, Stephen, about valuations, this idea that so much of this is baked into this market that when you actually see that come to fruition, when you see those numbers actually show up, everyone kind of says, okay, well, that's exactly what we expected. Let's take some money off the table now because now we don't know what happens next. You're not just seeing it in the Palantir space. You're seeing this in defense stocks in Europe as well because so many people have priced in this massive momentum tied to government contracts with the mix of AI. And then when you actually start to see and value it on the multiples that it's trading at, you say, wait a second, maybe it needs to come down a little.
Well, also, does it help or hinder when the CEO is, as he always is, typically bullish? This is Alex Karp of Palantir saying these are arguably the best results that any software company has ever delivered. Yeah. I mean, if people are worried about valuations, you can make that argument. Does it help or hinder? Look, just lastly, though, there are still loads of big deals happening. Alphabet and Meta have also conducted big bond sales recently. Is there still big demand from investors on the debt side?
There absolutely is. I think where maybe tech companies are getting punished in the equity market, they're getting rewarded in the bond market, excuse me. I think this is really crucial here because in the equity market, and again, what happens in the equity market affects the bond market. It kind of changes the valuation and the issuance and the rates that you can offer in the bond market as well. But think about it. A lot of credit investors have been lacking a forum in which to get involved in the AI trade as a bond market investor. So this is kind of the dynamic that a lot of companies are taking a bet on. You saw it with Oracle and the massive, I think, over $30 billion issuance they did in the States. I think what's interesting in the last 24 hours is that Alphabet came in and they did a double debt sale. They did it in the United States in dollars and then $3 billion in euros as well, which tells you that this capital markets deal activity boom you're seeing is not just an American phenomenon. It is actually bleeding into Europe. And I think that's really crucial. Not only are they coming to market, They're oversubscribed deals. People want in on this trade in the bond market.
Okay, Kriti, thank you so much for being with us today. That is Bloomberg TV anchor Kriti Gupta. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
The next stage of the European Union's climate transition hangs in the balance, with ministers meeting in Brussels to hash out a deal on the emissions cuts they expect to deliver over the next 15 years. So that's 2040. They're aiming to sign off on an updated climate pledge ahead of the COP30 summit in Brazil, which starts in a few days' time. Our reporter Mikhail Kubala is here with me in the Brussels studio for more this morning. Mikhail, what exactly are ministers debating here in Brussels today?
It's likely to be a big, long day of climate talks here in Brussels. European Union environment ministers are essentially meeting to agree on new targets for cutting greenhouse gas emissions. One major proposal is to reduce carbon emissions by 90% by 2040 compared with 1990 levels. That essentially is a key step, an intermediary step to this ultimate goal of the EU to reach net zero by 2050. This is days before the COP30 talks kick off in Brazil, and that sort of leads me to the other goal that they're trying to reach today, which is to reach a deal on an emissions targets for 2035, which signatories of the Paris Agreement are supposed to submit to the UN. The EU has already missed a deadline to submit that pledge, and with top EU officials traveling to the COP in just the coming days, the ministers meeting is sort of a final push to put a seal on those agreements.
The thing is, we've seen a pullback in terms of climate targets in the US under President Trump. How has that debate then influenced or played out in Europe?
Yeah, it's an interesting debate. Europe is caught between economic worries back home and really that shifting landscape where the US is pulling back from their climate leadership. But there's always been a debate on these ambitious goals in Europe. Attention has traditionally turned to the bloc's major economies. Germany has concerns over its embattled car industry, and other countries in Central Europe are worried about their heavy industries. Hungary and Slovakia are not expected to support that 90% target, for example. What's also interesting to look at is France, the other economic heavyweight. It's traditionally been a leader on climate ambitions. Remember, it's home to this enormous nuclear energy fleet and the Paris Agreement itself. Recently, what we're seeing is Paris is also stressing that need for more competitive industries, and has been seeking concessions on language in some of the proposals that are debated today. The broader green agenda in the EU is also under some strain. The EU has delayed its anti-deforestation law by a year, for example, and in the last two weeks, 50 French and German CEOs wrote to their leaders, urging them to rethink corporate climate rules, like a directive that obligates them, that requires them to have a detailed transition plan. Now, none of that really means that the EU will back out of its climate ambitions. The EU institutions are very, very clear about that. They say we are staying the course. But some of those emerging worries about competitiveness means it's more difficult to put industries and all the 27 members on one side of the debate.
And look, CEOs have been very vocal about this as well. You know, if you think about Ryanair's Michael O'Leary also being very clear, as he often is, and forthright about his views on some of these climate rules. Let's just take a listen to what he had to say about some of these measures when he spoke to Bloomberg yesterday.
There's a real, if you like, schizophrenia in Europe. You have most of the growth economies, Sweden, Croatia, Hungary, Italy, have worked out are abolishing their environmental tax on air travel because they're if you like, a break on growth, and they're being rewarded with dramatic growth. We're switching capacity to those countries. The three countries who don't get it are the dumb Germans, the stupid French, and Rachel Reeves.
Now, Michael O'Leary from Ryanair there. Now, he, of course, not shy in sharing his views about things like this, and he never really has been either. But do those comments land better now among the debate among European leaders than necessarily they had before, given the broader debate between competitiveness and maintaining this climate leadership?
Yeah, he doesn't mince his words. The EU, it's a challenge. What the EU is seemingly trying to do is to link the climate goals and competitiveness, not setting those two words against each other. Now we have the Draghi and the Letta reports warning that Europe risks falling behind the US and China. Brussels is now shifting its tone. It's talking about industrial strength and simplification, all of that. This attempt to cut red tape, speed up permits, and at the same time, as the phrase goes, stay the course on climate goals.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.